And I think we now have the first official sort of view of the economic impacts of all of this, and they are quite startling. The governor referred to a 10% unemployment rate, which we'd heard from the federal government in the last few weeks. And I think that understates it, really. They're talking about a 10% fall in economic activity in the current quarter, in the June quarter. And this compares to a survey of economists from just before Easter, where the consensus was about 3 or 4%, so much bigger than what many private sector economists have been thinking. And compares to the last recession, where I think the level of GDP decline was about 2 or 3%. So this is a very, very big hit. And the really startling figure was their estimate of hours worked falling by 20%. And this really captures what the unemployment rate doesn't. And that's all the people on JobKeeper who aren't working, all the people who are working less hours, the underemployment, which I think is a real issue here. And so, it really has reset the frame on the magnitude of the economic impacts. And I think we're going to hear a lot more governments and politicians talking about this going forward.
Now, in terms of the reform response, yesterday the governor of the RBA was talking about the need for reform. That's part of the effort to build consensus towards the need for some, not just business as usual post this crisis. And the government, it seems, is bringing fresh eyes to all sorts of policy reform possibilities. What do you want them to do?
Well, the governor, I think, was pushed on this in the Q&A section, and it was quite clear that we're going to get a little bit of a snapback when social distancing restrictions are eased later in the year or whenever that may be. But this recovery is going to be very slow and very gradual. We're going to have a lot of spare labour, i.e. unemployed people, and we are going to need a really sort of strong policy focus. In fact, the strength of the recovery will be defined by how effective government policy is. And the governor pointed out 5 key areas. He talked about the need for tax reform. He talked about the government really rolling its sleeves up with infrastructure and taking a long-term view on that. He talked about reducing regulation and red tape. He talked about IR reform and freeing up labour markets. These, I think, were key. And the one I think is really important here is reskilling and upskilling the Australian workforce. This is a great opportunity to retool Australia for the future of work, something which I think we've all been talking about for a while, and he's put a real emphasis on that. And we really need to see this happen, start the planning for this to happen now, because both sides of politics are going to have to give and take here. There's going to be policies that involve more government intervention in the economy, such as the infrastructure spend, such as the support for critical industries, and there's going to be policies where the government has to pull away a bit and let the private sector go, such as relaxing some of the regulation and freeing up the labour market. So, we've struggled with this for 10 years. The governor made it quite clear that none of these are new. We've been talking about this sort of reform agenda for a long time. It's just the political class has not been able to successfully execute on it. We must now execute on it, is the governor's view, if we want to have a strong recovery that gets people back into jobs over the next few years.
And the National Cabinet should be a mechanism which could deliver on some of those more vexed policy areas. Is one of them that you would like to see the GST in that sense?
Well, this National Cabinet is doing great things for Australia in the last 6 weeks, and it would be fantastic to see that continue with this reform, because it is going to have to be give and take from both sides of politics. And I think with tax reform, the governor was quite clear. We need to reduce our reliance on income taxes, both personal and company. We need to make it attractive to invest and to really get the economy going again. And of course, that means other taxes are going to have to go up. And I think the GST is an important one that has to be looked at. It's been a political no-go zone for so long. And just about all economists agree that it's a very good tax if you can get the offsetting fairness arrangements put in place. And this National Cabinet is the ideal place to nut that out behind closed doors and get a deal in this emergency situation. But it's more than just that. It's the IR side. I mean, the labour market is a highly contestable part of politics, and I think trying to make some headway there. I mean, there's nothing fair about 10% unemployment, and we've got to get people back into jobs. And if that means we've got to have a more flexible labour market, then I think, again, that has to be part of this reform story.
Yeah, let's hope that that unity of purpose continues. And we've seen the volatility, from the oil price. The government's moving to try and build a strategic reserve while prices are low. But volatility on that front, the Virgin going into voluntary administration on another, yet the markets seem to be holding up okay. What do you make of that?
Yeah, well, we've had a strong bounce from the equity market in the last 3 weeks. It was a horror show at the start of March as all of this was unfolding. And we're still well off the high levels from earlier in the year, but there is this air of complacency around the equity market. And I think we're just about to see the economic statistics come out all around the world and really, like the governor did yesterday, highlight just how severe the economic shock is everywhere, not just here in this country. The United States is going to take a big hit. So I think the equity markets are looking a little complacent at this stage. And I think the oil price volatility this week, Virgin's collapse are all stark reminders that, yes, this is an event for the economy and the society, but it's also a financial event. And there's a long way to go on a lot of those financial dynamics.
And just generally in terms of the way that the government is managing the situation, this crisis, hundreds of billions being spent, the RBA governor coming to the table as well. On a health front, we're doing well. Overall, you'd give a solid pass mark in terms of the economic management in the face of this contraction, the largest we've seen since the 1930s, as the governor said.
Yeah, and it is. It's going to be the most severe contraction in the economy. It's almost unimaginable, the situation we find ourselves in. If you couldn't have thought of a worse sort of shock for the economy. The government has tucked away ideology. It has pivoted where it's needed to, particularly with the wage subsidy. The governor supported it. I think most economists think it's the right thing to do. It's going to cost us, but it just means that, on the recovery side, we're going to have to free the economy up. We're going to have to give the private sector a real run at really investing. And we've got to give people the skills, the tools they have for this new economy and really get the place going again. And I think the government so far and all the state premiers and the whole national cabinet structure has served us extremely well. And as I said before, I just hope that we can see this continue right through the course of the rest of this year and lay the foundation for what really needs to be a 5-year view on the policy framework for this country to reinvigorate itself.